equity, mate.
I will say this about investing. Everything you do learn is cumulative. What I learned at 20 is useful.
Welcome to another episode of Equity Mates, where we will help you learn to invest in 20 minutes or less. We break down the world of investing from beginning to dividends so that you can hopefully make some returns. My name's Bryce, and it's good to have him back in business because for the last two episodes he's been MIA. I'm joined by my equity buddy, Ren. How are you going, bro?
I'm very good, Bryce. I was in the interviews, but yeah, I was not in the intros.
No, you had a few things to sort out, but by the sounds of things, you're all good to go now. So I'm glad you're back and joining me live and for a full episode.
Yeah. Got a house, back in front of a computer at a new desk, so ready to get back into Equity Mates.
So today, Ren, we are going to do an update on our ASX game because we haven't done one for a while, and last we both looked, we were both in the red. And then I've got a quote for you that comes from an investor that both you and I follow and listen to. And I was listening to him on a recent podcast, and he has a theory that I would love to show you and get your opinion on, something that you haven't heard yet. So looking forward to hearing what you have to say on that.
Yes, very excited, very intrigued, I've got to say.
Mate, I'm pumped to see. Will you shred him? Will you agree with him? I'm not sure. That's what I'm looking forward to.
It would be a big call for me to shred him, but we'll see.
Okay, so let's get stuck into it, Ren. ASX Sharemarket game we started back in, I think it was August. We were reasonably active with it for the first week. And then podcast and whatnot has gotten the road, so we've taken our eye off the ball a bit with this one. But there's been a lot of change in the markets over the last couple of weeks. Would you agree?
Yeah, massive. Well, yes and no. So people who follow the day-to-day changes in the markets would probably realise that 2 weeks ago now, at back end of the week, we had some massive drops in America that led to drops around the world, including Australia. And then in the 2 weeks since, the markets have been pretty choppy. So they've gone up and down. But really, if you look back 3 weeks ago, we're more or less flat around the world.
Well, I'm certainly not flat, that's for sure. So I guess I'll start with my portfolio. And for those of you who have just joined the show, the ASX each year or twice a year run a game where they give you $50,000 in fake money and they let you invest it into the market just like you could in real life. And you can play with all of the ASX top 200 stocks, I think over for about 4 months or so. So Ren and I have chosen some stocks, and I'll just start with the bad news. Ren, my total portfolio value is $46,618.32.
46,000?
Yes.
Okay, you are still beating me.
Oh, what?
but not by much. I am $45,138.29.
Oh, man. And so how much cash are you at the moment?
So this is probably an indication of the amount of time I've spent in the game. I only have 20,000 invested.
Yep.
I think some of mine got stopped out, so I've actually got like 25 grand in cash.
Same with me. I've got 20,800 invested and 25,700 in cash. So pretty bang on. So what's in your portfolio at the moment then?
So only two stocks, both I've lost money on. If people were listening to us hoping that we would have a red hot crack at this game, we have seriously let them down.
Very much so. Yeah. Apologies to anyone who wanted us to really give this a good red hot crack, but
yeah.
Good lessons.
Yeah, good lessons. Also, looking at the chart now, I see what I said about 3 weeks ago is wrong. The Australian market has gone down in the last 3 weeks, so
very much
forget what I said earlier.
So yeah, your two stocks. What do you got?
Yeah, so the two stocks I've got are A2 Milk and Costa Group. A2 Milk has actually gone all right the last week. It had an alright week, but I bought it when it was a little bit more expensive. So I've lost a bit of money on that. And then Costa Group, I have lost a fair bit of money on, over $1,000 on that. So really, yeah, don't look at my don't take my share market game performance as trading advice.
As an indication of true performance.
Yeah. Look, I guess the important thing to take away, and I guess this is what we were testing ourselves on, was how do we go short term? And I think both structurally and temperamentally, I am not suited to it. And what do I mean by that? Structurally, I'm at work all day and I just don't have time to look at the market. And so I just miss, moves. But then temperamentally as well, I kind of hate the day-to-day. I think I can understand the logic behind buying companies that retain their earnings, reinvest them at high rates of return, and compound in growth over time. Like, that conceptually makes sense to me.
Yeah.
The more speculative side of buying something today based on volume, based on trading patterns, based on charts, trying to speculate what someone else will be buying it at tomorrow. For me, because obviously a lot of people make a lot of money doing it, so I'm not disparaging it for everyone, but for me personally, I don't think it's well suited to me.
I think even talking to Chris in one of the previous interviews, I think it was 2 episodes ago, if anyone hasn't listened to it, jump on, because he actually won the ASX Schools share market game as a teenager 3 times in a row. And yeah, his strategy personally as an investor is very much long term, but the way that he explained how he won it was very much hands-on. He was going and looking for speculative buys and spending time in the library at lunchtimes and a lot of time on it, which is something that you and I have absolutely not done with this. And I think it's really showing in our results.
So what companies are you holding?
Well, I've also got A2 Milk. I bought them at $10.62 and I think they're $9.50 now. Nice. So I've lost about $700 in them. I bought CSL at $202. They're now $188, so I've lost $438 on them. And then I have the jewel in my crown is APT, Afterpay, which is the most heavily weighted stock in my portfolio at the moment. And I bought that at $16.96 and it's now $12.50. So I've lost $3,500 on them. And the interesting thing here is that my stop loss actually bottomed out. It didn't kick in because it dropped so quickly on, I think it was Thursday last week or Wednesday last week. It dropped about 20% about 14 to 15% in about 20 minutes. And that was because there was an announcement that there was going to be a Senate inquiry into buy now, pay later businesses, Afterpay being probably one of them and probably the most prominent in the market at the moment. So investors took to the markets and really sold off Afterpay in fear of what might happen to them down the track. But interestingly, that's all that was announced. And just like we were discussing with Chris and some of our other expert investors, is that the market sort of reactions are always exaggerated, and when markets are shocked, I think they overreact to these sorts of things. And then the last couple of days, we've seen Afterpay rebound, 12% or so. So unfortunately, though, it's still in my portfolio and really hurting me. So that's where a lot of my loss is coming from.
But in saying that, it hasn't just been a bad week for Afterpay. It's been a bad couple of months, hasn't it?
For Afterpay?
Yeah.
Yeah, you're right. I mean, it hit highs of $22 and then... You're right, over, say, the last couple of months, there's been sort of bits and pieces of news articles here and there starting to not necessarily slam them, but raise awareness of the risks that are involved with Afterpay and these sorts of companies, and they've had to be on the back foot a bit. The fundamental business hasn't changed or anything like that, but I think people are now becoming more aware, particularly as this in the state of the economy and that sort of stuff, and with high levels of personal debt and that sort of thing. It has been on a slide. $22 now down to $12.50. So yeah, it hasn't been great.
It's lost like 40% in 2 months.
Yeah. So anyone who bought at $22, unfortunately, you're ouch.
Yeah,
But learning there, I think Look, I think you especially, Ren, have sort of seen this coming for a while, and I totally agree that, there was going to be a lot of scrutiny on them. But, they were certainly overvalued in my opinion, and it was just one of those momentum buys, and all good things have to come to an end. I think it's now sort of readjusted back to probably a bit more of a reasonable price for what it's doing. But it's going to be interesting to see how the market reacts over the next couple of months before this Senate inquiry actually kicks in.
I think I've made my thoughts clear, if not on this podcast, definitely to you.
Yes, very clear.
I'm staying away, regardless of what the price is.
Yeah, and that's because why? For those that have just joined us, why do you think that is?
I don't really like the business, to be honest. I think it says it does credit checks. I'm skeptical of how robust those credit checks are, and it doesn't charge interest on its loans, which is a good selling point, but it gives it a very thin margin of error. So if the defaults start piling up from poor credit checks, then given that they also recently announced they're capping their late fees at like $68 or something, at some point there will be a tipping point in the default rate, if it's 10% default or whatever it is, where this business just becomes uneconomical. So I'm a little bit skeptical of the economics of the business. But more than that, I'm not a massive fan of the business model. I think it's pretty easily replicated. I think what they've done really well is it's been a massive land grab for retailers, and they've done really well in capturing a lot of the Australian market. But in saying that, what's to stop PayPal or whoever, some American startup, coming over the top and offering exactly the same service with the weight of their financial infrastructure behind them?
Yeah, no, all good points.
Yeah, I was sort of eating my words, as it had a pretty great year, and I think like quadrupled in price in a year. So there was a bit of eating my words, but the last 2 months have been good for me. They have been.
Well, Kylie Jenner actually tweeted about Afterpay for a positive spin for the business. She has a cosmetics business. Kylie, I don't even know what the business is called, to be honest. I don't really follow her. But she tweeted a screenshot of her checkout online, and now saying, "Hey guys, you can now use Afterpay for my business, blah blah blah." So I don't know if that was a paid initiative by Afterpay, or if Kylie's just super pumped that now people can buy now, pay later for her cosmetics, but a good bit of marketing there for Afterpay, but didn't make any difference to the share price.
Yeah, and look, at the end of the day, like, it is a really smart business, and the fact that it's charging retailers, and I think it makes like 80% of its revenue from the retailers rather than from the customers, is a nice twist on the traditional lending and credit businesses. But yeah, I'm not completely sold. So, for example, rather than Amazon letting Afterpay clip the ticket, why wouldn't Amazon just offer a lay-by option?
Yeah, absolutely.
I mean, the financial product of no interest, no money down, isn't really new. Like, Jerry Harvey's been doing it for 20 years. They've just wrapped it up in a sort of nice technology offering, and they've done very well. I think, what I was saying before, finding businesses that, have high returns on capital and retain their earnings and then reinvest at those high rates of return on capital, I think I'm staying away from Afterpay.
Alrighty, Ren. Well, let's see how it all plays out. I'm still long Afterpay, but absolutely have some of your concerns in the back of my mind as well. In lieu of time, Ren, I think what we will do is leave the Jesse podcast quote for next episode. I'm going to leave you hanging. Apologies for that, but I think it deserves some time. So I reckon we wrap it up there, unless you don't have anything else to add. I think we will chat next week.
Yep, sounds good. Given I've just gone on this rant, I'm sure that Afterpay is going to hit an all-time high in the next month. And I look forward to you crowing about that in a future podcast.
Same.
Yeah.
All right, see you, bro.
All right.
Hello, mates of Equity Mates. Or I guess that just makes you Equity Mates. Anyway, it's Bryce here. One of the most frequently asked questions we get is, where do we find information about all these stocks and where's a good place to start? Now, we could do a whole episode on this, and we often do touch on it, but the best place to start is by signing up to our Thought Starters weekly email. Each week, we send you some cool stuff that has caught our eye during the week, as well as some more detailed articles on stocks and invested-related content. We also include Basics 101. These are articles tailored specifically for beginners to really propel you on your way. We don't spam you. We hate spam. It's once a week and there's enough stuff in there to occupy you for a full day of browsing at work. Now, Ren puts a lot of effort into finding quality articles for you guys, so if anything, just sign up so he feels the love. Head to equitymates.com and chuck in your email at the bottom of the page.
Equity Mates and the people appearing in this program may have positions in the companies mentioned. This is general advice only. Please speak to a financial professional to understand how it may pertain to your individual situation.